studying your last two. I swim med tea when they turned in. The staring down to mute. And can learn the pole that sunk he died.
Schedule 141 is known as the GIFI Notes Checklist. Unlike Schedule 100 and Schedule 125, which report the corporation's financial statements, Schedule 141 serves a different purpose. It provides information about the notes to the financial statements that accompany those statements. In other words, it tells the Canada Revenue Agency about the notes. It is not the notes themselves. To understand its role, think of a complete set of financial statements. Normally, this package includes a balance sheet, an income statement, and a separate section called the Notes to the Financial Statements. These notes provide additional explanations that help readers understand the financial statements more completely. They may describe accounting policies, explain significant transactions, or provide other important disclosures that cannot easily be shown within the financial statements themselves. After preparing the financial statements and their accompanying notes, the corporation completes Schedule 141. This schedule functions as a checklist containing a series of questions about the financial statement notes. By answering these questions, the corporation provides the CRA with information about the disclosures included in the financial reporting package. The completed Schedule 141 is then filed electronically as part of the T2 corporate income tax return, together with the other GIFI schedules. Because it follows a standardized format, the CRA can quickly identify the types of financial statement disclosures that accompany the return. One important point to remember is that Schedule 141 does not replace the notes to the financial statements. The notes remain separate documents prepared in accordance with accounting standards. Schedule 141 simply summarizes information about those notes through a standardized checklist. The key takeaway is that Schedule 141 acts as an information guide for the CRA. It confirms whether financial statement notes are included and provides standardized information about those notes, helping the CRA better understand the corporation's financial reporting while maintaining a consistent and efficient electronic filing process. The notes to the financial statements provide important information that cannot be fully explained by the numbers shown in the balance sheet or income statement alone. While the financial statements summarize a corporation's financial position and performance, the notes add context, explanations, and supporting details that help readers understand those numbers correctly. Schedule 141 helps the Canada Revenue Agency identify the types of disclosures that accompany those financial statements. One common area covered in the notes is accounting policies. These explain the accounting methods and principles the corporation used when preparing its financial statements. For example, they may describe how inventory is valued, how revenue is recognized, or how assets are depreciated. Understanding these policies helps readers interpret the financial statements consistently. Another important disclosure involves related party transactions. These are transactions between the corporation and related individuals or organizations, such as shareholders, directors, affiliated companies, or other entities under common control. Because these transactions may not occur under normal market conditions, they are often disclosed separately to provide greater transparency. The notes may also include information about loans and commitments. This can include details about bank loans, borrowing arrangements, guarantees, lease commitments, or other contractual obligations that could affect the corporation's future financial position. Another category is contingencies. These refer to possible future obligations or uncertain events, such as lawsuits, legal claims, or guarantees, where the final outcome is not yet known. Although these items may not appear directly on the balance sheet, they can be important for understanding the corporation's financial risks. The notes may also explain significant accounting estimates and judgments. Financial statements often require management to make estimates when exact amounts are not known. Examples include estimating the useful life of equipment, calculating doubtful accounts, or determining warranty obligations. These estimates can have a significant impact on the reported financial results. Finally, corporations may include other financial statement notes to provide any additional disclosures required by accounting standards. These supplementary notes ensure that the financial statements present a complete and transparent picture of the corporation's financial affairs. The key takeaway is that Schedule 141 is not concerned with the detailed content of these notes themselves. Instead, it provides the CRA with standardized information about the types of financial statement disclosures that accompany the corporation's T2 return, helping support accurate financial reporting and efficient tax administration. Schedule 141 is completed near the end of the corporate tax preparation process, after the corporation has already prepared its accounting records, financial statements, and the accompanying notes to the financial statements, rather than containing the notes themselves. Schedule 141 serves as a checklist that provides the Canada Revenue Agency with standardized information about those notes. The process begins with the corporation's accounting records. Throughout the year, business transactions are recorded in the general ledger and supporting accounting records. These records form the foundation for preparing the corporation's financial statements. Using the accounting records, the corporation prepares its balance sheet and income statement in accordance with the applicable accounting standards. These financial statements summarize the corporation's financial position and financial performance for the year. The next step is preparing the notes to the financial statements. These notes provide additional explanations, accounting policies, disclosures, estimates, commitments, contingencies, and other important information that helps readers understand the financial statements more completely. Once the financial statements and notes have been completed, the corporation prepares Schedule 141. This schedule contains a series of checklist questions that describe the financial statement notes and related disclosures. By completing the checklist, the corporation provides the CRA with standardized information about the notes without including the detailed narrative within the schedule itself. Schedule 141 is then filed together with the other GIFI schedules, including Schedule 100 and Schedule 125, as part of the T2 corporate income tax return. The complete return is submitted electronically to the Canada Revenue Agency for processing. A common misunderstanding is that Schedule 141 actually contains the notes to the financial statements. This is not correct. The notes remain separate documents prepared under accounting standards. Schedule 141 simply acts as a checklist that tells the CRA about those notes and confirms the types of disclosures that accompany the corporation's financial reporting. The key takeaway is that Schedule 141 fits into the T2 filing process as an information bridge between the corporation's financial statement notes and the CRA's standardized reporting system. It improves consistency, supports efficient electronic filing, and helps the CRA understand the disclosures that accompany the corporation's financial statements without replacing the notes themselves.